Welcome to Share Talk, the only podcast where investors come first.
Hello and welcome to Share Talk. Today I'm joined by Oisin Fanning, who is CEO at SLE.L Energy. How are you today, Oisin?
Good morning, Zach. How are you?
Right, we've had your latest update, and you've described yourself or the company as being in a very strong position. Just run us through what you think the highlights are today.
I suppose the highlights are we have, as you know, already given out a dividend yield of 30% this year. What we're saying is there's another at least 110, 115 million due back in the next 15 months. And we will continue to give at least 50% back in the form of dividends to shareholders. That's key. One of the other things we've done, in terms of the profit and loss account, if you look at it, you'll see that we've put in a non-cash impairment of certain assets, in particular Barry Rowe. So we wrote Barry Rowe down from 51 million to 2.8 million. And if you like, you could regard that as an aggressive way of cleaning up the balance sheet. And that's particularly key because, you know, it's the end of all our write-downs, effectively. It has us concentrating in Nigeria, and if anything else in the future, Barry Rowe will be a windfall, not a write-down. So it just cleans everything up very, very tidily. So it's just going to be dividend yield, year in, year out. That's effectively it.
Right, because obviously Nigeria looks like the gift that will keep on giving, or is kept on giving. That's been extended as well? Is that correct?
Yeah, I mean, well, yes, the license has been renewed for a further 25 years now, so that's particularly key for us. I mean, it's a huge license the size of Bahrain. There's a lot of work and investment going into the field during the course of the next sort of 15 to 24 months, and that will continue always. So, you know, one of the big key issues for us, though, is this year the pipeline will be live and active. So there's a 50-kilometre pipeline being built as we speak to an FSO, which goes straight down a river, right out to sea, which means we won't have the losses and theft, which amount of 40% of production. That will disappear. So without actually doing anything, we will see a 40% increase in revenues later on this year. And that's particularly key because that means on top of the loan notes, there will be further dividends which will be available to shareholders as we go forward.
So, I mean, SLE.L, it seems to be sort of unique in certain ways in terms of the certainty of the income that you have. Is it now a company you would say it's in sort of the medium league rather than the small league? Is that the way of looking at it?
Yeah, I think that's correct. I think it's one of the few companies on AIM that has really returned money to shareholders over the last 2 years, total of 66 million. We'll do at least that again during the course of the next 12 months, if not more. Yeah, it is. It's unusual to see an AIM oil and gas company being able to give a return to investors, and that was our premise from day one. When we listed after doing this deal in October 2016, that's what we said we'd do, and we will continue to do so.
And I mean, I was going to turn around that question. The fact that it is so unusual to have a dividend-paying stock on AIM and flush with cash, etc., etc. Do you think that some investors or some observers are sort of looking your gift horse in the mouth? Is that an impression you get?
Possibly, yeah, it is. You know, I mean, look, I think, you know, the story of Nigeria has taken a while for people to understand, and they were rightly cautious in the beginning. Because it's been a while since any AIM oil and gas company got actively involved in Nigeria and actually managed to show that they could take cash out of Nigeria. I think shareholders have seen that happen now 2 years in a row, and I think now the confidence is there. And we're seeing a good interest in the stock, particularly from retail investors who see, you know, the potential of more dividends as a hedge, if you like, against the market. And yeah, we're seeing a livened interest, there's no doubt.
And yes, so just to go over Barry Rowe again.
Yes.
This is, in a way, the traditional AIM prospect. You know, it's like if SLE.L didn't have the Nigerian assets and the cash flow there. What are the prospects there, and what are the time frames you think from this?
Well, they're quite good, but it's taken a long time. So look, we originally we had 30% of Barry Rowe. We converted it into a 4.5% net profit interest a number of years ago, which means there's no cost to SLE.L. We just sit there and we wait for effectively Providence and Lansdowne to find a partner to come in and actually start drilling some of the wells. I mean, they've drilled a number of wells which have been successful. Now they need a partner to come in and start developing the field. They were close to that, and they thought they had a Chinese partner who seemed to have disappeared. And I'm sure they'll find another partner they're working extremely hard on. When they do, it'll be a big bonus to SLE.L, because if that field gets up and running in production, that 4.5% net profit interest would be quite substantial. But frankly, we just sit there calmly, just waiting for them to find a partner. The field is too big. They will definitely find one. I mean, it's too big for somebody to ignore. They will find one in time. Maybe some of the slowness is down to the fact that the message coming out of Ireland in terms of the Greens is not a particularly positive one for oil and gas companies. And that needs to change, because otherwise Ireland is going to pay very, very dearly for its energy costs.
Oisin Fanning, CEO at SLE.L Energy, thank you very much indeed.
Not at all. Thank you, Zach. Bye-bye.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.